Okay, good morning, everybody. It is Thursday, March 3rd, 2022, and we're going to get started here with our pre-market analysis on the S&P 500 futures market. Just to quickly look back here on the 10-minute to yesterday, um, let's take a look here. So we got a pretty good, the market opened right around here, and it was pretty wonky right around the open there. If anyone was trading in the room, remember we were long, and then I told you probably going to pull back, and then it pulled all the way back to the bottom, and then I told you it's probably going to come right back to the top, came right back to the top. Looks like we actually started to get a little bit of a trend as the morning went on there. So as usual, the open and the first hour there a little bit messy, but then we got this nice push up and came and found trouble once again at 43.98 RI level, and couldn't really get through the highs of the day before that, right? 43.99, I believe. Um, I noticed we pushed up to 98. We pulled back. We held our two minor eye levels right into that pocket. Came back up. Tried to get through 98. Got a double top, and never was able to get past that. But looks like right now, as we're speaking, we're starting to get continuation up to the upside, right up into the next pocket. Remember, a few days ago we said this 44.15 up to that major swing low, which I believe was 22.75. That was our next target. So basically, it's one by one. I think we talked about 43.80, and then we talked about getting through that, we would get to 4400, and then once we get through 4400, we had this pocket around 15 to 22.75. That's where we're sitting right now. So I don't know if it's going to sit here and pull back. That's not what I'm arguing. But we are right up into, and I should have it shaded, which is that next zone of expected resistance. So beautiful stuff so far. And let's go ahead and do what we do every morning. Dial up, and we'll start looking at all the time frames here and see what we can eke out of the charts this morning. So let's go up. The quarterly, the 3-month chart is probably not going to have anything new to be added. So we'll just go ahead and scoot on by. Nothing to say there. Our monthly, again, we have these potential, what look to me, potential reversal bars. I know they're very bearish, but having those gigantic wicks to the downside, you know, like I said, going into the past, every time we see it on the monthly chart, we do get continuation or some sideways action, and then the market holds the low and goes. So I'm just paying attention to that. I'm not arguing that we're going to have a major reversal just because the monthly bar looks the way it looked. So I'll just be watching that, and then down to our weekly, like we said, first time frame to really give a bullish signal, have a really strong bullish candle. And now you can see this week now, this new weekly candle, we've broken through that previous bullish candle that we were looking at coming into the beginning of the week. So this high here was 43.91, getting through that, like I said yesterday, was opening us up to potentially start to push and retrace the whole sell-off from the all-time high. So we are following through here on the weekly, and that's really all I can say from this time frame. And let's go down now. Let's get to our daily and get into the intraday time frames. So the first thing I'm noticing here on the daily is, so yesterday, before this candle started printing, there was really no clue of bearish divergence up off the 61.8. Now it's just interesting to note that we came up, we bounced, and we held the 61.8 retracement level here for a day or two. So we came up just in front of it, could not get through. 44.01 was 61.8 to the tick. They couldn't get through that 43.99 level for 2 days there. And now we're just starting to peek through. But as we peek through that critical level, we're starting to get a potential bearish divergence on the daily. So I'm watching that. That might be a clue, especially if this all closes at the end of the day and the next candle opens and we get some follow through. Might be a clue that we're finding a top and the market's going to go ahead and continue to chug lower. It's just a clue. I'm not making any predictions here. It's something I want to watch over the course of the next day or two to see if we do get a topping pattern. Outside of that right now, obviously looks like we are breaking out of that 3 or 4 day range, right? So we created the range back on the 25th, and for the last 3 days, basically traded within that range from the 25th and haven't been able to break out until, of course, right now, as I speak, we're starting to get this break. Now that critical level there, that swing low is 22.75. So going back up to that 10-minute chart, remember that's that 22.75 dotted line I have up here and this shaded region down to the major eye level at 15. So again, going up to the daily here, that's what that red line is going across. So wouldn't be too surprising if there's some trouble there. And if they get through there, there's one other major swing low I'm watching, and that is this swing low here at 44.3850 coming across here. So getting through that 22.75 opens up a push up to that 38 area. And then a little bit further, there's another major daily swing low that I'm watching all the way up at 44.83. The actual number 44.8475. So these are just some of the levels I'm watching on this daily chart. If we do continue to push, I would not be surprised to see some type of contention at those levels. So let's go down into our intraday time frames and take a look at where we are in terms of our structure and everything like that. So again, I have that region shaded where we are right now. Getting through there, I've got that swing low again up around 38.50, kind of highlighted there in that shaded region. And getting a little bit through 38, we still have a potential to have trouble at the top end of that next shaded area up there. So I'm watching that. And then the 27 extension of this major bounce out of the lows from 41.0175 is right into this, what I would argue is maybe a supply area. A lot of failure and selling from there. And it happens to be the 27 extension, and arguably still within that structure choppy area in the market. So that's that next level to the upside that I'm watching. If we zoom out and we look at the overall structures in the market here, and we look at where we are right now, we're potentially, if we get through 22.75 here and up through that other swing low at 38.50, we're pushing up into kind of a dividing line here. So if we can get through the two levels I just mentioned, and we can get up through this 44.50, 44.60 area, it's bringing us up into the next chop block. So we'll come up, remember 44.80 was the 27 extension I mentioned, could be trouble. But once we get up through that lower area around 44.50 to 44.60, we're now into this top, this structure area from about 44.60 to 45.15, 45.20, give or take a few. So a pretty big, a lot of room up in here from 44.60. Let's see, about a 50 to 60 point move if they just break through all that. So just keep that in mind. And if the bulls do not make it through some of these contention levels we have above, the market's going to go ahead and pull right back into and stay within this chop block that we've talked about for a while now. So if we zoom out and look, and I'll go ahead and highlight it, this little area in here and this little area in here was the two chop areas we were talking about for a while. And again, not being able to get up through the swing lows we just mentioned means we're stuck within these two chop blocks, which have been messy, even going all the way back months before. This was a messy area, right? A lot of, I guess you could call it congestion or consolidation right inside of these two areas. So ideally, we're going to get out and start continuing to chug, but anything's possible. We'll see what happens here. That's what I'm seeing on the 4-hour. Let's go down to actually look at some of our major eye levels here. So this morning, again, 15 to 22.75 is the next pocket that we would expect to be trouble for the bulls here. In fact, it's still highlighted from a few days ago from one of our previous morning analyses. And so highlighted right there. If we do end up popping through 22.75, my first target to the upside is going to be, it's going to be that 44.45.50 level. So a pretty good stretch there. Call it about 20 points or more to the upside. I think you could probably make some money on a 20-point push. Just keep in mind that if they do start pushing up there, that 35.75, and let me see something here. Don't have anything on the chart, but I am going to put it here. That 35.75 is a swing low that I want to be aware of. I'm not saying it's going to hold there, but I want to be aware that there is a major swing low right there that could be trouble as the bulls continue to push. So just keep that in mind this morning. And let's go back up here to the 60-minute and see what else we can take from the chart here. So it's looking pretty strong right now. Let me see if the 4-hour has anything bearish. Not really. Looking pretty strong. So we've got 15, we've got 45.50 up above, with the caveat that 30, and what was the number again? 35.75 is going to be a potential trouble spot there. And then if they get through 45.50, I think it's a pretty clean shot right to 74.50. So again, another give or take 20, 30 points, give or take a few on either side. That would be that next target to the upside. Any further, and notice the 27 extension is just above 74.50. So it's probably going to be an interesting zone, and that is that 27 extension lining up with all of this, what I would argue is maybe somewhat of a supply area. So could potentially have trouble there. On the flip side, if the market doesn't get through some of these areas that we're talking about and it starts to pull back, we want to be aware of some of the levels we have below us. In the most immediate area here, what I want to do is go to my 10-minute, because we can see kind of the smaller leg. There are some levels in here that we want to be aware of. There's a lot of stuff down here, but the main things that are sticking out is the resistance point 43.98 to 99, maybe 4400 there on a pullback. That might be an area for the bulls to jump in for a bounce. A little bit further than that, we've got this area that was a lot of trouble in the pre-market here, and then yesterday, remember at the end of the day we came down and couldn't really get through there. So this area looks interesting, and we also have our proprietary orange line there. This could be an interesting spot for some contention if the bears try to sell things off. A little bit deeper, there's a major eye level, and we all know how well the major and the minor eye levels work, so there might be some reaction there, but I'm more so looking down around our minor eye level around 50 to 52, and a little deeper is going to be 50% of the previous day. And there happens to be a swing high right at that minor eye level at 43. So that little shaded area looks good to me. And then a little bit deeper is our next major zone or major eye level at 24.50. So I'm watching that, and then a little bit deeper than that would be right into 08, and there's a little bit of a range of about 06.50 to about 08.50 there. So in the most immediate area, these are some of the levels I'm watching. There could be potential holds from there by the bulls. And then on the flip side of things, if they continue to push, I'll go back up to my 60-minute. We've got these levels kind of all mapped out here. The first thing we would want to see again is getting through 22.75 there. Again, this major swing low back, where are we? Back over here. So that's what I'm looking at for the morning. Let me see if there are any interesting divergence patterns to see if we have a strong argument for this push. I just want to take a look. Remember, the daily might end up having a bearish pattern over the next course of the next day or two. On the 4-hour here, let's see. So from the low of yesterday, we've got a nice bullish, and this is what we were looking at actually going into yesterday's market. Was we said we have a nice bullish signal here, so being able to hold would spell a bullish push. So we still have that there. There were some bearish clues again right around that 4400 area, but we're breaking through. So those are basically done with. So we've got a nice bullish signal on the 4-hour from the previous daily low. The 60-minute as well seems to have agreement down there. In fact, right here is another one that I did not mark. So some pretty good bullish signals from the previous daily low. And then on the pullback of the overnight session, the 4 hour. Actually, I thought I saw something on the 4 hour. It's not there. The 60-minute and some of the shorter time frames do have this bullish signal that was really never broken. So we came down, and this happens all the time. We get a nice bullish signal, and we might even get confluence of multiple time frames. The market bounces out, comes back and tests it, and even breaks through by a very small amount, and then bam, goes exactly where that signal was indicating. So it looks like we're holding that level. We're trying to push. There might be a little bit more weight on the bullish side this morning, but remember, the market's going to do what it's going to do. So regardless of whatever signal you have, whatever intuitive feel you have, the market's going to do what it's going to do, and you just have to react, and you have to know where you want to take the market when you jump in, and that's the whole idea here. We've got our levels, we've got our signals, and if the market, even though we have a lot of bullish signals here, if the market starts to sell off and that momentum is there, we're going to use these levels to short and look for targets down to some of the levels that we talked about. So in the most immediate area on the pullbacks, we've got these levels I just mentioned. If it ends up getting through the previous daily low, we have to zoom out and look at the larger picture for what we're pulling back into. So we've already kind of covered this local region. Anything below the previous daily low there, that green line, opens us up right back into, we've had this shaded yesterday and never came back to it, right around that 42.50 area. A little bit deeper from there, and of course 62 is in the way. A little bit deeper, I'm really liking 42.13 again, and a little bit deeper from there, 89 to that swing high at about 97. These are just in the most immediate area. We are around 4,400, so getting down here is going to be a 200-point correction. Not out of the realm of possibility, especially in this kind of market, but if we do drop 200 points, I'm probably going to be more interested in selling the market and just taking it for the ride. So we'll come back to this area if we do end up getting down there. So hopefully that helps you guys coming into the open here. It gives you an idea of where we can expect the market to go if it starts moving in a specific direction, right? So if we can't get through 15 here, our target's going to be down into the orange line, down into 61, down to 50% of the previous day, etc., right? Unless there are any questions, I think I'm going to jump over to our members section here so we can dial down to our short time frames and start looking for some trade setups and stuff. So I don't see any questions in the Trader Talk chat room. So enjoy your day, guys. Remember to not get married to one side of the market. It's been very two-sided. And in fact, yesterday, like I said, out of the open, it was like, let's go back there real quick here. It was up, and then it was down, and then it was up, and then it was. So don't get too married to direction. If you're in a trade and it starts going where you expect, hold on. Leave those runners on there. That's where you're going to make your money. When you get in a trade on a pullback and that market goes 10, 20, 30, 40 points, that's where you make your money. All right, that's where I've learned to make money, is letting my winners go. And then if a trade doesn't work, I close it out and just wait for the next trade. Right? So here's an example. Try a short off our eye level. Doesn't work, right? Comes up 3-4 points against me, plays around, never really goes anywhere. This trade right here, had I have taken it long off 1075, absolutely no risk. I mean, we're talking 2 or 3 ticks here, and we get an actual move off the level, right? That's how I trade. It either hits my level and goes, or I get the hell out of the trade. Because the trades that are going to hit my level and work are the trades that are going to give me my money. Same thing right here. Market pulled back right into a prediction point. It barely broke, right? So didn't take much risk, no more than a point or two. The market ended up pushing here 20, 30 points in the matter of a half hour. So I'm all about putting my trades in, getting off of a level, and if the market moves, I make my money. If it moves a far distance, I hopefully will have runners. Sometimes I'm only scalping with a single contract, but the idea is to let those runners go, and that's when you're going to, at least for me, that's where I started to make consistent money on the market. So have a great day, guys. We'll be back here on Monday to do the larger time frames and see if anything new is on the charts there on that quarterly, monthly, and weekly charts. So have a great weekend. I'll see you guys on Monday.